My name is Junaid Jadwat. I am the head of Diversified Industries for South Africa within corporate and investment banking. Diversified Industries has a few subsectors, of which two of the core subsectors is the industrial sector and the automotive sector. Both are extremely topical at the moment, given what is happening globally, locally, and regionally. Today with me in the room is Paul O'Flaherty. Paul is the CEO of Metair Group Limited. Good day, Paul, and thank you for joining me.
Oh, Junaid, nice to be here. Thank you.
As mentioned earlier, there's a lot happening in the market at the moment. There's lots happening in the political framework, GNU discussions, budget discussions in South Africa, but also globally with the tariff wars or tariffs that have actually been coming out of the US and trade wars. Metair is at the epicenter of this by being a South African company that's been in existence for over 80 years.
Yeah.
We have been banking you for almost half a century. Maybe as an intro into just some of your thoughts around what's happening in the automotive sector, what's happening globally, regionally, and then locally.
Yeah, thanks, Junaid. I think the first thing to note is the importance of automotive sector in South Africa. It's approximately 5% of GDP and 20% of all manufacturing in the country. Metair specifically has been around, as you said, more than 75 years as a listed company, servicing the automotive industry. The government of South Africa has been very supportive of the automotive industry in South Africa with a whole lot of incentives and grants to allow original equipment manufacturers to set up and manufacture out of South Africa. And the majority of the production in South Africa actually gets exported overseas. If you look at Africa per se, it's only really South Africa and North Africa, so Morocco, Algeria and Egypt, who actually produce motor vehicles for export purposes. And so this industry is significant and can really grow within Africa. But as you said, significant challenges that we're currently experiencing.
You were brought in by the board almost a little over a year ago.
Yeah.
Can you take us through some of the challenges that you had been working on over the last year, and how has that affected Metair, and in terms of the strategic focus, in terms of where is Metair now positioned to look at going forward?
You know, when I reflect on Metair, as you say, I've been there just over a year, it's almost a perfect storm. So the South African automotive industry had an intent to produce 1.3 million vehicles by 2035 and around 750,000 2 years ago. The reality is the production in South Africa just before COVID was around 630,000 vehicles, and when COVID hit, the entire industry got hit, and so the production of vehicles decreased significantly. And obviously Metair as a primary supporter of the industry felt that. The second issue that happened was the floods of Toyota that happened just post-COVID. And so when Toyota closed down, and Toyota being a major customer of ours, that significantly affected Metair. And Metair at that stage had to raise quite a bit of debt to make sure that they could continue in operations. The third aspect that Metair experienced is about 10 years ago, they bought a battery storage company or a battery manufacturer in Turkey. And they bought it at a time when the Turkish economy was doing well. But certainly for the last 5-6 years, Turkey is in hyperinflation, significant increases in interest rates, and that operation became problematic for Metair. And the debt that Metair owed for that operation became an issue. And I suppose the final issue that affected Metair was a very new project that Metair undertook with one of the major OEMs, Ford, in building the harnesses out of Quadricusa. And due to significant delays in the project, poor project management, not understanding the design and the scope, Metairs suffered significant losses. So when you add that all together, the Metair that I joined was a company trying to work its way out of the problems it had faced, but with significant debt hanging on its balance sheet. And that's the task that I had to deal with.
We've been with Metair throughout that journey, especially in the recent past. Standard Bank has been involved in the funding of the Hesto expansion, has been also involved in the facilities at the group level and in across most of Metair's subsidiaries around providing more general banking and working capital facilities. The last year has been a year where the bank, together with you and your management team, have worked to resolve the debt issue, which is still something that's a key focus for us, and continue to provide the support around protection of jobs. Or before I get into that part going forward, I wanted to focus a little bit around the transaction and the fund deal, and to get a view from yourself around the support from Standard Bank, the support from your financial providers, and how that has impacted the strategic direction of Metair.
Yeah, I think, Junaid, it's very clear to me, if I reflect on the last year, without the support of Standard Bank, Metair would be in severe financial difficulties. And that means 14,000 jobs, and you can imagine the indirect jobs at stake. I think from the very beginning, when I joined Metair and got my feet on the ground, Standard Bank were there to support. We had to identify all of the debt that was there. We had to make sure that the financial disciplines in Metair were improved, to make sure that we can forecast properly, that we really know the future so that we can repay that debt. And Standard Bank has been there all along in this journey, helping us build our models, helping us relook at our forecast, challenging us on what's required out of Metair. And I think that's built a very strong partnership, because we know what it is we need to do, and you will hold us accountable, and that's the right way it should be. So I think the transaction has been incremental as we started to surface the debt. I think a key thing for Metair that the banks were very clear on was to sell our Turkish operation, which we did. We unfortunately didn't get much net disposal out of it, but if we had not sold it, that company would have been in severe financial difficulties, and Metair would have had an issue. And the debt we still owed on Mutlu, the Turkish operation, because of the problems in the Ford contract, our Japanese partner, had put significant cash into the business. We had to fund them. Standard Bank understood that. And then I suppose the big debt restructuring was what we did in this first part of the year, was to really refinance this debt and make sure that Metair can earn itself back into its debt structure, right? One of the things we had to do was centralize our treasury. We've got a whole lot of businesses that have never had that type of concept. Day-to-day, daily cash monitoring, monitored from the group level, cash sweeping. And Standard Bank have been fundamental in giving us the tools, assisting us with the methodologies to get that done.
Working through all of the challenges around capital structure, Mutlu, discussions on Hesto with Yazaki, etc. We got to a point during the course of last year where an opportunity presented itself.
Yes.
And that opportunity has been the starting point in terms of the new Metair and the strategic direction. When you presented the opportunity through to us, it was quite a surprise. We were heading in one direction and we were trying to solve a lot of the issues both offshore and locally. And you presented this opportunity, which had been presented to yourself, as, to me, the starting point of how the group reshapes its strategic direction going forward. Paul, it would be good if you could take some time to
reflect on that.
Reflect on it, get into your head and take us into the thinking about Metair's strategic direction going forward.
Yeah, no, that's a very interesting story. Unplanned, actually. So if I ever said it was planned, I would be lying. As we were trying to figure out our debt and figure out the future strategy of Metair, And reflecting on where Metairs come from, it was obvious that we have a significant concentration risk. We have the OEMs of South Africa who we produce parts for, and so it's such a concentrated risk that whenever they have their issues, Metair really feels it. An opportunity came up of a company called AutoZone, which is in the top 3 in the country in terms of aftermarket parts and services. It was going into business rescue, so we felt that we could get value out of this company. The South African aftermarket parts and services is estimated around a 90 billion rand market, very fragmented with 3 big players, of which AutoZone is one. And so we see this as a significant growth opportunity for us, both in South Africa and potentially in sub-Saharan Africa. So in fact, we've split our verticals. We now deal with automotive component direct manufacturing, and we deal with aftermarkets, 2 very distinct verticals, and creating that balance to, in terms of our concentration risk. And Standard Bank, as you said, you were surprised.
And that paints a clearer picture in terms of the direction. Diversification,
Absolutely.
a true growth story, an Africa-focused growth story, and it ticks all the boxes in terms of the strategic vision of not only Metair, but it also speaks very clearly to the strategic objectives of Standard Bank and Standard Bank Group.